Steve, for Kenya Airways, it appears the problem is not really how to manage, how to grow, but how to manage the costs.
From what you're getting from the results?
Yes, indeed.
What you're getting from the results is actually clearly that a lot needs to be done in terms of how to manage the costs, because it seems costs are spiraling out of control, and soon, if things are not really taken into account on how to manage them, it will be eating into the profit margins, into the operational costs, and shareholders will start asking a lot of questions, because we're looking at an increase of 44% in terms of our operational costs, and an increase of 66.1% in terms of fuel costs. And this is as a result of increase in operations and fuel prices across the globe, which have been mitigated by a weaker shilling, which because fuel is actually done in the dollar, which means that fluctuation of the weaker shilling has resulted in 11.1% of influence of the dollar on the fuel issue.
One of the things the airline is now considering, one is, of course, its plans for a low-cost carrier, Jumbo Jet. Those are still on. And secondly, putting up its own hotel just to try and manage the costs, because when passengers don't have connecting flights, then you have to put them up in a hotel at your cost.
Honestly, I don't think that would be the smart way to go in terms of looking at how to manage issues of service provision, because locally there's a lot of competition. We're seeing Londra has actually given up its stake in 540, which means that the new majority shareholder in Fly 540 is actually going to reshape the local airline and give KQ a run for its money. When you look at the fluctuating shilling, when you look at the issue of customer service, a lot needs to be done. How the hedging is done, and how the whole the issue of routing across the region and locally, the way they're doing it leaves a lot to be desired. And when you look at how the rights issue is handled and the essence and purpose of the rights issue, KQ is headed for turbulent waters unless a new strategy is actually put in place on how they can be able to manage the issue of handling customers, especially when the flight delays, especially when routes are cancelled, because we're seeing that the European man is sick, and a lot of long distance flights are being cancelled or suspended for one reason or another, especially because of the euro issues and the weaker shilling. So a lot needs to be done. A lot of fundamentals need to be factored in before they can actually say want to put up a hotel and things like that. Another issue is probably the best way to go about it will be developing strategic partners with the local hospitality industry, so that they can be able to mitigate spiraling costs in terms of operation.
In all fairness, Kenya Airways is one of the top performing African airlines. The other two that come to mind is the Ethiopian and South African Airways. It has ordered 9 Dreamliners. It is expanding its flights to London to 10 from 7 right now with the Olympics. But Virgin is also leaving that route. So are you questioning the fundamentals?
True, KQ is one of the best airlines in Africa. It's actually it's a home brand. But at the end of the day, we need to look at what's happening around the globe vis-a-vis how it all connects back at home. And at the end of the day, the issue of fuel hedging, that is one. And two, the aspect of how to mitigate rising costs. Because when you look at operational costs, 44.1%, or that is 28.7 billion in the last 1 year in terms of increase. This brings in question exactly what strategy is being done to mitigate this. And in as much as it's a good brand, strategy needs to be changed to maintain the brand flying high in Africa. And when you look at how Ethiopian Airline is doing its business, or the South African Airlines, you can also see that they're also suspending a lot of routes. For example, South African Airlines has suspended a couple of routes to Rome and Muscat. Same to KQ, which leaves you wondering exactly what's going on. And when you look at Virgin Atlantic, they suspended the operations to Kenya, citing the Kenyan market is a bit difficult, the issue with the euro, and operational costs. So these are issues that KQ needs to put in place before they can actually look at the next scenario in terms of going forward, because like right now there's reduced demand for customers from from Italy, from Muscat, the European side. So
right.
What's going to be done? Probably increase more local routes within the African region, or look at the Asian markets.
All right, and the KQ has stated that it's intention to fly to every African capital by 2014. Speaking of issues with the euro, Kenyan remittances in April dropped 10%. Has that got to do with the global economic situation and people in the diaspora are just not sending enough money because, well, they don't have it?
Well, as I told you earlier, the European money is sick. Remittances have dropped by 10% according to the statistics coming out of Central Bank. This is as of April. And one of the key reasons is there's a lot of issues out there. You know, the dollar, the weaker shilling, the fluctuating shilling against the dollar, and also given exactly what's been happening, especially in America and Europe. In America, we're seeing a lack of jobs, you know, especially the last quarter when you look at the numbers, the job creation actually dropped down by 11%. When you look at the European issue, remittances dropped by 17%. This is as a result of what's happening to the euro, the issues happening in Greece, Spain, and now Italy. So there are a lot of issues, and you know, given how money was coming in, I think people back there actually, you know, tightening their financial belts on how to survive. Some of them are losing jobs, you know, some of them are changing jobs, some of them are doing 3-4 jobs to be able to survive. So I think this will continue into the next quarter until something is done to mitigate the issues.
Let's talk about today being a big day in East Africa. Kenya, Uganda, Tanzania, Rwanda, Burundi all have their budget days. What do you expect from Njeru Githai in Kenya?
Well, there's a lot of expectation from him. I actually don't envy him at all. Especially given the fact that this is going to be the first budget, you know, just going into the devolution module, which kicks off after the next general election in March. So which means that whatever he does today, whatever is read out in Parliament today, must factor in the devolution process, how the counties are going to survive, how the counties are going to, you know, start operationalizing. And at the moment, we're seeing that our county commissioners have been sent on the ground, which means they will need support, they will need finances.
But the other thing is, Biko, what is the market expecting him to do in terms of monetary policy and just ensuring that the economic growth rate projections are met?
That is the bigger question, because when you're looking at the budget, you know, 1.5 trillion, of which 500 billion, you know, many of us are asking, where is he going to raise the money from to look at the deficit? Is he going to do it the traditional way, which is debt and grants from the development partners, or is going to be smart and be able to see how the gap can actually be factored in? Also, the aspect of a few issues. The VAT bill has actually raised a lot of our concerns, and its implementation and effect on the economy. The other aspect is basically what are policies that are going to be in regard of the business law, the tax law, and, you know, the aspect of widening the tax bracket. Which other groups are going to be factored in to be able to raise enough money to handle the deficit? The other aspect is the KRA and how it gives back what you call remittances. You know, once you've gotten your VAT and things like that, you know, in terms of being able to sustain business. So there's a lot of demand from him on fiscal and monetary policy. Also the issue of the autonomy and of the central bank. You know, when you look at how central bank handled the shilling the last few quarters, a lot of it is also going to come into place. And the other thing, given that we have a new constitution which demands a lot of accountability and openness, the issue of public participation into this process is actually going to be queried a lot.
And the tax remittances from the Kenya Revenue Authority have been a big concern. Steve Biko in Nairobi, many thanks. Director, Hidalgo Group.